Good morning, master traders and money magnets. How you guys doing today? So grateful to see you guys. I just want to say thank you guys for being here and allowing me to serve you guys as your Uncle Charters. Yesterday, Uncle Powell was speaking and he said that we're doing good, we're doing better, we're doing fine. And they decided to pause the interest rates. And you guys can see that the market kind of responded positively. As far as Dow Jones go, the DIA, I talked to you guys yesterday morning about the 418.5 level and the 200 daily moving average. Now, the Dow Jones managed to clear that 418.5 level, which was a critical fib level, also a previous pivot low, but it closed right around the 200 daily moving average. We're gapping a little bit from where we closed yesterday, but we're gapping down a little bit, but still managed to stay above the 14.5 level. Now, my job is to identify the bull case scenario and the bear case scenario so we can trade it in either direction because anything can happen in this market, and I want us to be prepared and be able to make some money using the price action. Now, as far as being bullish, the bull case scenario is the first thing that Dow Jones needs to do is stay above 418.5 and managed to recapture and clear that level yesterday. Stay above 418.5 is a start. Second thing it needs to do is clear the 200 daily moving average. The 200 daily moving average sloping up a little bit. It's around 420.3-ish. Dow Jones needs to clear that level. Get above the 200 daily moving average. That would put 422, 424, and the next critical fib level at 425.3 in play. Getting above 425.3 would recapture and clear a fib level and break out this little wedge that we have here to the upside and possibly back test the 50 daily moving average. All right, that's the bull case scenario. Stay above 418.5, clear 420 to put 422, 424, and 425.3 in play. Above 425.3, I would favor a bigger bounce, possibly up to the 50 daily moving average. Now, the bear case scenario is Dow Jones need to stay below the 200 daily moving average and break down 418.5. 418.5 is critical. Like I said, it's a fib level, but it's also the support of this wedge. Okay? If we break down 418.5, it could be nasty against the bulls. Great for the bears. So if we break down 418.5, 417, 415, 413, and the fib level, next fib level at 411 in play. All right, guys? So let's summarize this. Above 418.5 and 420 clears, a bounce is possible. Below 420 and 418.5 fails, it could be the start of the next leg down. Okay? At the very least, we go test some previous pivot lows. All right? That's the plan for the Dow Jones. IWM also responded positively yesterday as well. However, it did clear fib level at 205.6 and we're gap below that now. So that is resistant. Bulls need to get above 205.6 so yesterday's breakout don't get invalidated. And they had some selling pressure at the next fib level around 207.5-ish. So 205.6 and 207.5 are the two levels that must clear. Two fib levels that must clear to give us more upside, 210 or higher. If we are to get bearish, it needs to stay below 205.6. Show some bearish follow through. Break down 204 to put 202, 200.8, 199, and 197 back in play. Apple overall still looking bearish. It did manage to get above the 5 daily moving average. We'll see if it holds. Support is at 213. That's the 5 daily moving average. And fib level at 211.7. If both those levels fail, more downside incoming. All right, guys, 213, 211.7 fails, more downside incoming, 210, 208, 205.7 or lower incoming. All right, if we are to get a bounce, 215 and 216.6 That's a fib level, must clear. You want to look to long if we get the at least a 15-30 minute chart close above those levels intraday to put 220 in the fib level, 221.5 in play or higher. We do have a gap around 228ish. Could be possible, but we'll need to clear 215 and 216.6 to start to get more upside in play. Amazon, it's just it's flirting with this fib level, the 1.786 fib level at 195.5. If it wants more upside, it got to bounce yesterday, but if it wants more upside, that level must clear to put 197 and 200 or higher in play. Above 200, I'd be more bullish because that would be a recapture of not only a fib level but the 200 daily moving average. If 195.5 truly rejects, 194, 192, and 190 all must fail to give us more downside. Microsoft, yesterday it closed above that fib level 387.5ish, but now we're gapping below it. So from here this morning, I have resistance at 386 and 387.5. Bulls will need to clear that to avoid a gap down, a gap and crap. Okay, they'll need to clear those levels to put 390, 392, 395 or higher in play. Overall bearish below 387.5. And if we break down 386 and 384.5, that's a breakdown of this trend line here. That would be bearish with 383, 381, 379, and all the way down to 377 would be a possibility. Meta had some selling pressure yesterday, broke down and closed below that 585 fib level. From here to stay bearish, 582 and 580 must fail to put 578, 575, 573.7, and 572 or lower in play. Trust no bounce unless 583.5 and 585 can recapture to put 590, 592 or higher back in play. Guys, that's all I have for this morning. I thank you guys from the bottom of my heart for being here. I love you guys so much. I will be back after market to cover the other ticker symbols. All right. I love you guys. Peace.